If you are 65 or older and you own your home, there's a real chance you're paying hundreds of dollars more in property tax this year than the law actually requires. Not because you made a mistake, because almost every state offers a property tax break to older homeowners, and almost none of them apply it for you. You have to ask for it. And here is the part that catches people out. Nobody sends you a letter. There is no phone call. The county simply keeps collecting the full amount year after year until the day you happen to ask the right question. So let me ask you to picture something. Somewhere in your house right now, there's a property tax bill, and there is a good chance the bill is higher than it needs to be and has been for several years. In the next 10 minutes, I'm going to show you what these programs actually are, the 3 different types, and why the difference matters enormously, the 4 things nearly every program tests you on, and how to find yours in about 5 minutes. I will also show you the 3 mistakes that get more applications rejected than everything else combined. And stay with me to the end, because there is one phone call I want you to make this week. It takes about 20 minutes, and it can pay you back every single year for as long as you own that home. Go and find that tax bill now. You're going to want it in front of you while we talk. Let me start with why so much of this goes unclaimed, because the reasons are quite ordinary. First, in most places the relief is not automatic. You could have qualified for the past 10 years and never received a single dollar of it because you never filed the form. Second, when counties do notify people, it usually arrives as a line of small print on the back of a tax bill, and among everything else. Third, these programs are almost always administered at county level rather than state level. So the office you need is local, and the state website may only point you in a general direction. And fourth, and this one causes the most trouble, every state calls it something different. If you search for property tax exemption for seniors, you may find nothing useful because your state calls it a homestead exemption or a circuit breaker or a senior assessment freeze. Before you go looking, you need to understand that there are 3 separate types of relief, and they're not the same thing at all. People confuse them constantly, and it leads to real disappointment when a tax bill arrives. Let me take them one at a time. An exemption reduces the taxable value of your home. So if your house is assessed at $200,000 and you receive a $50,000 exemption, you are then taxed as though the house were worth $150,000. Your bill goes down this year and every year afterwards. A freeze works differently. A freeze locks your assessed value at its current level, so that even if property values in your neighborhood rise sharply, your assessment does not follow them upward. It does not lower your bill today. It protects you from future increases, which over 10 or 15 years can matter more. And a deferral is different again, and this is the one people misunderstand most. A deferral does not reduce what you owe at all. It postpones it. The unpaid tax accumulates, usually with interest, and it is settled when the home is sold or when it passes to your estate. A deferral can be exactly the right choice if you're short cash now, but you should understand clearly that it reduces what your family eventually inherits. Many states offer more than one of these 3, and some allow you to combine them. Now, the rules vary from state to state, but nearly every one of these programs tests the same 3 things: age, ownership, and residence. Age is usually 65, but the date it gets measured on varies more than you would expect. Some states test your age on the 1st of January. Texas lets you qualify at any point during the tax year. New York asks that you turn 65 by the 31st of December of the year before. So if your birthday falls later in the year, do not assume you have missed it. Some states begin at 61 or 62. Many run a parallel program for disabled homeowners at any age. Ownership means your name is on the deed, and residence means this is your primary home, the one you actually live in, not a rental property and not a holiday home. Many programs then add a 4th test, which is income, but not all of them do, and this is worth knowing before you rule yourself out. Texas applies no income limit at all to its main over 65 exemption. New York does apply one and sets it locally. So the income test is where most of the confusion lives, and it is also the part that varies most from one state to the next. I want to spend a moment here, because where a state does apply an income test, this is the point at which people wrongly decide they earn too much and stop reading. The caps themselves vary enormously from one state to another. But more importantly, the definition of income varies too, and that is what catches people. Some programs count the income of the entire household. Others count only the people named on the deed. Some use the adjusted gross income figure from your tax return. Others use a broader measure of total income that includes things your return does not. And here's the one that matters most. In a number of states, Social Security benefits are partly or entirely excluded from the income calculation. New York now measures income using your federal adjusted gross income, which means only the taxable portion of your Social Security counts, not the whole benefit. So a retiree whose income is mostly Social Security may qualify quite comfortably, even when their gross income looks far too high at first glance. Please do not assume you earn too much. Go and read the actual definition your state uses. It takes 5 minutes, and it is the difference between qualifying and not. There are also some additional categories worth asking about, because they are frequently more generous than the standard senior program. Most states offer a separate exemption for disabled veterans, and in some states that exemption is very substantial indeed, sometimes eliminating the property tax entirely at higher disability ratings. There are usually surviving spouse provisions, which can allow a widow or widower to continue receiving relief that was originally granted to their late husband or wife, though this often requires an application of its own rather than continuing automatically. And there are disability exemptions available well before 65. When you telephone your county, ask about all of these, not only the senior program. They will not always volunteer them. So here's how you find yours, and this genuinely takes about 5 minutes. Search for the name of your state, followed by the words property tax relief for older adults. When the results appear, look for the official state site. That will usually be a Department of Revenue or a Department of Taxation. Skip the blogs and the law firm pages sitting above it, because those are often out of date and some of them are trying to sell you a service you do not need. Once you are on the official state page, it will point you toward your county. But honestly, the single most effective thing you can do is pick up the telephone and call your county assessor's office directly and ask one simple question. What property tax relief programs am I eligible for as a homeowner over 65? They handle this every single day. They will tell you, and it costs nothing. 3 mistakes reject more applications than everything else combined. The first is the deadline, and this genuinely surprises people. The deadline to apply is usually months before the tax bill actually arrives. In most New York communities, it falls on the 1st of March. In Texas, it is the 30th of April for that year's bill. And what happens if you miss it depends entirely on where you live. Some states make you wait for the next cycle. Texas will accept a late application for up to 2 years and apply it retroactively. So find out which rule yours follows rather than assuming the worst. So find your deadline first before you gather a single document. The second mistake is documentation. Most offices want proof of age, proof of ownership, and proof that the home is your primary residence. A driver's license, the deed, and a recent utility bill will usually cover all 3, but confirm the exact list with your own county because sending the wrong thing can cost you weeks and sometimes the whole year. And the third mistake is assuming you already know whether it renews itself. This genuinely goes both ways. In Texas, the over 65 exemption is filed once and stays with you. In New York, there is a separate renewal form, and if you do not send it back, the relief quietly disappears and the full bill returns. Nobody will chase you about it. So ask your county which of those 2 yours is. Let me be straight with you about what this is worth, because I'm not going to quote you a figure I cannot stand behind. The saving varies widely depending on your state, your county, your home's assessed value, and which type of relief you receive. For some homeowners, it is modest. For others, particularly where a freeze protects them through years of rising valuations, it becomes substantial over time. What I can tell you with confidence is this. It repeats every single year for as long as you own and live in that home. And the total effort involved is 1 phone call, 1 form, and perhaps 3 documents. 20 minutes once. There are very few things you can do in 20 minutes that pay you back annually for the rest of your life. So here is what I would do this week. Today, find a telephone number for your county assessor's office. Tomorrow, call them and ask which programs you qualify for and when the deadline falls. Ask them to send you the form and the list of documents they need. Then gather those documents, file it, and if the program requires annual renewal, write that date in your diary straight away while you're still thinking about it. That is the whole job. One important note before you go. Everything in this video is general education, not tax or legal advice, and these rules genuinely do differ from state to state and even from county to county. Please confirm the details with your own county office or with a qualified professional before you act on anything. If this was useful to you, subscribing is how the next one finds you. And if you tell me which state you are in down in the comments, I will cover the specifics for whichever states come up most often. Next time, I am covering the additional standard deduction for filers over 65, which is another one that quietly goes unclaimed every year. Thank you for watching, and I will see you then.